The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. And of course, we were up a little bit yesterday. Now we're a little bit down. A little manic, depressive market out here. We're off 14 points on the S&P cash volume, just a smidge more than it was the last few days as we start the show, 2.2 billion shares. But well within the margin of error. And, of course, Janet Yellen was out blabbing today and didn't really give the bulls a lot of thing and a lot of wind beneath their wings, let's say that. And so we've got a market that doesn't have a lot of energy on the way down, doesn't have a lot of energy on the way up. We've gone through lots of stocks the last couple of days. Couldn't break out the tops, couldn't break out the bottoms. Anyway, we'll be all on all of that. Anyway, what else do we got going on out here? Well, let's get this party started. We got a phone call waiting in the wings, and when we can't get started until I get my history out of the way, I'm kind of OCD that way.
That it's all just a little bit of history repeating.
On this day in 2001, the Enron Corporation, the seventh largest corporation in the U.S., goes bankrupt, filing for protection from its creditors under Chapter 11 of the Federal Bankruptcy Code. The disclosure of the worst accounting scandal in American history has vaporized $60 billion in Enron's stock market value. Less than 10 months earlier, Enron's stock had traded for more than $115 per share. And of course, we found out that everybody from broker-dealers to the accounting firms were complicit in this. And it's happened before. It's going to happen again. It doesn't change most of that. The ghost of Ken Lay is on the phone, I hear. Anyway, let's go to that right away. John in Boston, how you doing today, John?
Hi, David. It's good to talk to you. Now, I'm a little bit nervous.
Well, you should be.
Yeah.
Why would you be nervous?
I have IWM, and it seems like it hit a stone wall at about the 120.
Yeah,
it's getting a bad hit today. It's off 85 cents, much more than anything else. That's why I'm nervous.
I just think we're range bound. Like I said, I've been going through stocks here that can't break out the highs and they can't break out the lows, and we're kind of just range bound.
Do you think it has some chance of getting up to its high of the 129?
Probably not. I think that what you're probably looking at is a congestion zone right about 123. Normally, when you get into December, there's about 1.5% to maybe 2% bias to the upside. Stocks tend to go higher. They just don't go that much higher.
Okay, so you think it'd be reasonable to hang on to the 123? Assuming I can get there.
I think you're going to get it. I just, to me, I don't know where you bought it.
I bought it yesterday. Unfortunately, I sold a triple Q.
Yeah.
I should have kept that. And
yeah, to me, I would never have thought there was enough gravy in that trade to trade the IWM for 3 points. So that would just be something that goes against what I do. Some people trade for a lot for smaller dollars. I tend to trade a lot less and hopefully be more of a home run hitter. And that would just be against kind of what I'm good at. But yeah, I think you can probably get $2 or $3 out of it. It's probably 122, 123. Someone was asking me about Apple, and I said, yeah, you can get about 122 out of it, maybe 123. maybe as high as 125. But it's just not going to be a lot of gravy on the upside. And they're just, the thing is you always have the risk of walking out and finding something really bad happening. And that's why if I couldn't I'd have to probably see the possibility of hitting 129 before I could trade that. And even then, I'd probably only do that through options. So,
I see.
yeah,
Why do you think it's so much weaker today than the other index options?
Probably because the thought is that interest rates will be going higher after Janet Yellen came out and some of the other Fed people. And the people that will be last on the line to get cash will always be the smaller companies.
I see.
So if you're a smaller company, it's going to be harder to get access to cash as interest rates go up. It's always been that way, and
So I guess
it will
I'd
be that
better
way
off.
again. Yeah, I mean, you can see there's two ways of getting cash. One, borrowing it from a bank, and the other one is venture capital. And you'll probably see that technology is held up a lot better today. In fact, we'll get into it in a minute. But technology will hold up probably better through the next year as we raise rates. Doesn't mean that the whole market won't pull back, in my opinion. It's just that it's much easier to sell a bunch more shares for a technology company than it is for a bricks and mortar company like Home Depot or something like that. So
That makes sense.
Yeah, you're going to see a bifurcated market as interest rates go higher, and whether they go up in December or go up next year sometime, you're going to see generally technology for the first part of that raise hold on better because they have easier access to cash. They can expand easier with a lower cost.
I like to play the indexes, so I guess like the triple Qs would be pretty good.
Nah, I have a feeling. I have a feeling that that other than when big moves come along, which will probably be 3 or 4 of them next year, kind of like every year, those will be some very. If I play the indexes 3 or 4 times next year, I think I would be surprised to see 4 round trips in it. I think next year is going to be a big market for playing individual stocks and not playing indexes.
I see.
I think
Thanks for all the information.
Yeah, if you get an index trade, my guess is you're going to have it for a long time. It's not going to be trading in or out of these things on a daily basis. I think we've had a lot of that trading the range this year, which normally means we're going to go into some kind of trend next year. I suspect that trend's down. Like I said, if I shorted the indexes, it would be probably at the beginning of the year, I would be thinking that I could hold that for maybe 60 or 90 days. That kind of market has been gone for a long time because of the manipulation of the markets by the Fed, but I think that kind of market is coming back. Okay?
Okay, thank you very much, David.
You bet.
Have a good day. Bye-bye.
You bet. Yeah, it's just, this is where the wheat gets separated from the chaff in the IWM. But, I mean, you had in the chart, there was no probably reason to be buying IWM, in my opinion. First high was 50 million shares on September 17th. You got into that with 35 million shares on November 6th. And, of course, you had 30 million shares on Friday, just 28 million shares yesterday, and today just 8 million shares. Is it going down? Probably not. It's going to stumble higher on lighter volume, probably. But that's pretty much standard for the end of the year. Like I said, maybe 1%, 1.5%, 2%. A lot of times these markets just slowly go higher, and the only real money to be made generally are on surprises to the downside and more likely short squeezes to the upside in highly shorted stocks. So at least that's what we're playing in the newsletter as soon as we start getting a little bit of market momentum. I've got one position, and it is flat on the day, and I kind of consider that a victory. You can give me a call like John from Boston at 877-927-6648. You can email me at path@tfnn.com. I will get to those as soon as possible, and post a message in the den if you would like. Anyway, Oh, I got to get back to not a lot of news articles out here today, but there was one that I felt very interested in, and that is Qualcomm. The reason why Qualcomm had a little bounce out here today, pretty good for it. And this is what I'm talking about. You get a little news out here, you get a little bounce in a company that's been headed down. What happened with Qualcomm is they made a deal with Xiaomi, and that's how you pronounce it, like show me. And that, of course, is the biggest manufacturer of cell phones in China, and probably within 6 months, probably the world, maybe a year. They are biting at Samsung's heels. But, of course, China's done a very good job of keeping anybody in or outside of China in the cell phone and smartphone markets. It looks like Qualcomm has finally cried uncle and decided to license their technology. I think that is good in the short term. In the long term, Xiaomi will screw them and not pay them. If they pay them, they'll pay them half. I don't think anybody has figured out something I've known since I went over there and we started looking at manufacturing with my company in the mid-90s. And that is, they think all money is theirs. And most people don't believe it. They like to think of America as the most racist country in the world. Just get in between the Koreans and the Japanese and the Chinese, and you'll find out what real racial hatred is. A lot of that is buried for the public. Behind the curtains, there's a lot of Archie bunkers in Asia, and probably not as lovable as Archie Bunker. A lot more violent. A lot of people just like to look the other way. I think, too, of course, we know that CNN and others have been thrown out of China for reporting, quote, quote, the real news. They get to be told what they can and cannot report. But I would say if Qualcomm has done anything to seal its fate, this would be something that I think is almost suicidal on the long term. You know, I love Chinese. I like Chinese. I love them. Downside, though, is that they are probably more capitalistic for a communist state than we are. And I think we need to learn a little less about safe spaces and whether our feelings are going to be hurt, and probably a little bit more how to compete in the real world out here. And I think Qualcomm may have been drinking the Kool-Aid to get maybe short-term gain at long-term cost. We will be back. We've got more stocks to look at out here, probably a few more stories. Make sure and give me a call, 877-927-6648. Email me at pat@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. I wanted to look at Qualcomm. You know, it had a bounce out here. Of course, it came down on earnings and forecasts on the 5th of November. Pretty hard. 66 million shares. We're back up there, 27 million shares so far today. So not a whole lot. You really didn't go out here, kind of broke that big leg down with decent volume. So I still think we're probably in a lower trading range. I would like to see this thing back up at about $58 to pull the trigger on a short. And I have a feeling after looking at some of the other charts out here today, we might be looking at these. Now, the SMHs gave a fairly good clue yesterday that they had hit a high. If you hadn't looked at those today, didn't have an opportunity to listen to the rest of the shows today. But pretty good indication, at least at the highs out here, that the energy is kind of out of the SMHs. The October 23rd high was 56.36 with 5.2 million shares. Got into that yesterday with 1.55 million shares. Tried to go a little higher out here today, 1.5 million shares from yesterday, a million shares so far today. And like I said, a lot of these can drift up a little higher into the end of the year, but it leaves a lot of these stocks in very rarefied air. Any kind of bad news whatsoever can get everybody waking up on the wrong side of the bed. We're off 17.5 points as we speak, 2.4 billion shares, so still kind of a weak volume to the downside out here. I suspect now that Janet has come out and spoken today. In fact, I think I have a sound clip of her. Yeah. I think we got a little sound clip of what she had to say today. Yep, it sounds just like the parents on Peanuts. My eyes were glazing over about 30 seconds into it. I just couldn't stand it any longer. I read it later, but just a lot of could be this, could be that. But didn't sound dovish, and that's all the markets cared about. But yeah, that's anti-Janet, and of course, we've got our other stuff. We'll play any anyway. She talks too much. Don't think anybody cares about anything else other than that. Anyway, we've got this semiconductor, so that kind of was interesting. That took me to take a look at the stocks. And, of course, we've talked about this for a while. So 2X's? Why did I look at it early? Yeah, kind of the same thing. This thing's back up here to what should be fairly decent resistance and on light volume. You had your big gap down that really started the downside action on June 29th. This thing gapped down with 524,000 shares and kind of really started it. We had some big days down, and those were 1.4, 1.5 million shares for the big volume day when this thing really started seeing the downside action on the 30th of June. We've kind of made our way all the way back where that original volume was at. You still have high volume lows that are untested as of August 24th. But you came into the October 23rd high. You had 1 million shares at 92.65. We've gone above it. Probably going to close below it. Looks like today. I don't know. It's going to be close. But really do not have any juice whatsoever in the last 7 to 10 days. Now, a couple of those were, of course, because of Thanksgiving. We should be seeing some momentum getting into these stocks. And while we're weak today, I don't suspect that means that we'll be weak. Everybody will start looking the other way. Volume will drop, shorts will start to cover, and the market will move up just like it does almost every year. It may not be a whole lot. Like I said, maybe, we got the S&Ps hit, 2104 today. Let's say it closes out at 2120, 2125, or 2130. And it takes the next 22 trading days to actually do that before the end of the year. That just isn't going to be a whole lot. And again, the risk is that if you're long here, that we wake up and see another Paris or something like that for very little reward that I can see to the upside. So right now I am keeping my powder dry. I am waiting for the whites of their eyes and looking in my thesaurus, or maybe another book that has more mixed metaphors. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. And a lot of people, a couple of emails out there kind of predicting the end of the world. I think a little less virulent than that.
The world outside is hanging on by a very thin, non-GMO, cruelty-free organic hemp thread.
Well, anyway, it is a cruelty-free hemp thread holding us all up. Anyway, as I've got to have some fun here because it is kind of an interesting market. One day up, one day down, a lot of chop. Very easy to get whipped around a great deal. We've got the dollar index. Of course, it got up to 151 today on the continuous contract, still above 100. Looks to me like everybody wants to keep it pinned at 100. That may be problematic. Tomorrow, of course, we've got the ECB tomorrow. And part of that ECB is what I think everybody, at least from what I've read, is going to be a discussion of QE2 tomorrow. I suspect that that would move the dollar up once again, and maybe one of the reasons why we're having kind of a little pullback today. I think everybody's just looking at that. But I think the dollar is all set up for its next move higher. I don't know if that's going to be tomorrow or it's going to take a week or so to digest this move. I think we've got maybe a couple more bucks to the upside in this. And if something like Draghi comes out and talks about more QE, I think we could easily see the dollar index move higher, and I mean higher by a couple of bucks fairly quickly tomorrow. It's unclear whether he was truly going to do that. That's been reported in a lot of the European press, so we can look forward to that. But other than that, let's take a look at a few more things. Anyway, like we said, we were looking at the SOX, the SMH. We're starting to get some of these starting to show some signals, not enough for me to actually make any kind of index play. And as I said before, any index play, either the upside or the downside, I suspect, is going to be rather muted through the end of the year. I'm thinking that we've got a big move coming after the end of the year, the start of next year. And in the meantime, I'm going to be looking for stocks that don't have a lot of movement but have huge amounts of short interest, and ones that especially I like this right now. That is that the VIX probably should be a lot higher. It's not. That gives us action and options to go after that are fairly inexpensive. And we're in one right now. I probably will be playing more of them, but there just isn't a lot of movement out here. If you're playing for $5 or $6 on a $90 stock, you know, that's okay. It's just something that generally when I do that, I miss the big move because I'm kind of myopic. And I have a feeling that even if I didn't make one more trade before the end of the year, I would be happier being ready for what is going to, I suspect, happen at the first of the year. Other stocks of interest out here, looking at some of these like Toll Brothers, these kind of in these lower trading ranges. Again, you know, you're bouncing around from these big spikes down that happened around the August 24th low. In the case of Toll Brothers, it had one short spike on the August 26th and ran everybody out. But that's kind of setting that low around $33, $34. And of course, then we're having these little spike up on September 17th, setting the high part of it. The gap down on the 24th of August with all the volume is probably going to, you know, if we could get back up maybe into that 39 and a half, maybe these things are ready to roll back over. I just don't see it now. Some of the other stocks, like I said, that have fairly light volume and I would like to short, just need a little bit more. That's what I'm hoping over the next 3 or 4 weeks, that we get the kind of setup and the incredibly light volume and the frustration of bears that will not stop. And that would be very nice for me. Anyway, that would be a good setup. But if you're looking for satisfaction today, I suspect it is going to be short-lived either to the long or the short side. But Tesla Motors got these nice gaps down both on the 7th of October and on the 6th of October. And I suspect that you're going to probably go fill half of those, 245, and then you're going to go out the end of the year at 245 or 250 or something like that. And everybody's going to say, oh, it's going back high. But of course, we're going to see just what we see today and yesterday, which is fairly light volume. In fact, if you go back and look at the volume from the last gap up, which was on the 4th of November, this thing has just had no volume whatsoever. And it's a good indication of exactly what I'm talking about in a lot of these stocks if you're going to make money. And that is stocks that have huge short interest. I think last time I looked, Tesla had 40% short interest. And all that has to happen is the volume shrink and the volume really go tepid into the end of the year. And slowly the shorts will cover and the stock will move slightly higher. Didn't get this one because the options on this one were way too expensive. But a good example of something with 40% short interest, you're just going to have something happen to shake the faith of the longs, and you're probably not going to get it until the beginning of the year. No. Question, do I use TOS? The answer is no. So I don't do the hash marks or the plus minus to short. In other words, money lost between. No, I just buy I through experience and looking at probably 100 or 200 charts every day for the last 15, 16 years. Know that what you want to look for are the high volume moves and gaps for logical places to put trades on and take them off. So don't see a lot of that. Question via email is to look at the GLD. Do I have any comments on it? We'll take a quick look. You know, I talked about this, I think, last week. You know, you had a nice little pop yesterday. But this continues to look more and more to me like what we were talking about in crude. Talked about that yesterday and I think last week too. And that is that these commodities have gone down. They've come down. The volume's gone light. And they just continue to go down. And we saw that in crude, which kind of led the way. And now we're continuing to see that in things like the GLD and others. And that is that no matter how much you want these things to go up, they are heartbreakers and are headed down. And there's no real clear signal out here. I know Andy Heck's going to be writing some articles coming up. I gave him some suggested headlines, but I suspect that they are not politically correct and therefore will not make it into the Seeking Alpha article. But I think even Andy's were worse. So, you know, maybe he'll have to come up with some for it. But I think gold's just going to be a heartbreaker, much like crude. And, you know, crude really not doing any and not making and not helping at all either. But I think crude is the archetype for these commodities, whether it's gold, silver, platinum, copper, everything, natural gas. We're seeing the unwinding of this market. And I think it's going to be very light volume. But it can continue down just like crude did for weeks without any energy, but continued to break lower. And everybody kept on wanting to buy every dip in it, and there just wasn't anything. Now, everybody knows I have not been a proponent of gold, and that means that I may have missed a few of the moves up. But I've always said that I wanted to buy it and hold it for a couple of years, where I think probably the big money is in gold. And we're going to look for some kind of sign of true capitulation, and I continue to wait for it. Maybe it has to go down to $900 to wipe everybody out. Maybe it goes down there for one day. That's what I'd prefer, is some kind of incredibly brilliant single-day sign that just washes any bulls out. And the last thing that anybody wants to be told is to buy gold, and that is probably where I'd like to buy it the most. As they say, you want to buy real estate when there's blood running in the street, and I suspect that that is going to be the case for crude and gold and the rest of the commodity spaces for the hard commodities, not the soft ones. Anyway, you can be like Jim and email me at path@tfnn.com, and we will answer your questions. Wanted to look at a few other stocks out here. Autodesk and Adobe, some of these other stocks up there. I want to look at Adobe next. But Autodesk, another one of these stocks in the tech land that gapped up was on earnings, pretty significant earnings on the 5th of November, almost 13 million shares. And, of course, it backed off. It didn't go hit the high, which is the February 27th spike into the high with 5.3 million shares, $65. We missed it by a penny today, but 1.9 million shares so far. That does not make me feel warm and fuzzy out there. Again, a lot of these stocks are just in these upper trading range. I don't see a lot. You know, could Autodesk get back down to 60 and then go back up to 65 for the end of the year? I think, you know, kind of those scenarios are there. Maybe we have 1 or 2 days of action, but it just doesn't look like there's going to be a great deal of it. So I check back in on volume now. We're off 23 points on 2.5 billion shares. So there is a little bit of weakness out here. I'm not so sure that that isn't just everybody trying to get ahead of the jobs numbers on Friday. If they come in good, I think the last hope of the bulls that there will not be a rate hike will probably be buried. I had somebody else email me here. They don't say who it is. They're asking about whether or not I think that a quarter of a point makes any difference. And, of course, the dollar index. And the quarter of a point doesn't really, other than the fact that once they start raising, they've always started raising. And that will be the cloud over this market. The other thing is the dollar index. And the question was, don't all these big companies know how to hedge? And the answer is yes, they can. The problem is that hedges run out. If you hedged a couple of years ago when the dollar index was 80, and you said I hedged out 3 years, that's fine. But the question is, or the belief is, that everybody did hedge out for a number of years. And just from what I can tell from earnings the last couple of quarters, they did not. They hedged out maybe a year and a half. Now that's it. Now to buy hedging insurance, it's like buying home insurance when your house is on fire. My guess is they're not going to give it to you cheaply, if at all, and that becomes the real problem. Anyway, Autodesk up there, one that's is kind of sister is Adobe. This one, very interesting out here. Talk about no volume move back here. This thing, the problem is you don't really know where this thing's going to crack. Yesterday, they did get into a discussion about whether or not Adobe Flash will be gone. They are now actively encouraging people to use HTML5, and probably not a big deal for Adobe, but kind of an into a chapter where they made a lot of money for the standard for video on the internet. But more and more that goes away. And, of course, they got some pretty good cash rolling in for their subscriptions. But you got to hate this volume going back to the breakout of the 16th of October. We've had this kind of light and variable stumble back up all the way. And, you know, you're probably going to get some bad news at this. Don't know where it's going to be. But this thing could easily drop $7-8 in one trading day and kind of set up like that. I just don't see a lot in this. But again, you're betting that that will happen before the end of the year. And I don't know if I can take that bet or not. But that did I look at the XLF? I did not. XLF. You know, another one up here, up against its previous high on lighter volume. It got into the candle of November 6th that had 69 million shares. Got into it yesterday with 31 million shares. We're doing 16 million shares now. And I think that's kind of what we've gotten. You know, you had this real big run off of the October 2nd run up to the November 6th run. A little bit of a pullback. And then since then, the energy, you know, you had one day and then the energy basically fell out of this market and it kind of stumbled up here. But again, no energy at the tops, not a lot of energy at the bottoms, but on the energy on the bottoms, they just continue to go lower in the commodity space. And the other spaces are kind of getting a little bounces. So range bound is the watchword of the day. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. A few more to look at just before the end of the day out here. At least this hour. Of course, we've got Tom O'Brien warming up in the bullpen, getting ready for the next 2 hours, and see exactly what we got going on here at the end of the day. Off 22 points on the S&P cash, 2.6 billion shares. Again, like I said, not a lot of juice either up, not a lot of juice down, and a little bit of probably the last 2 days of getting ready for Draghi and the jobs numbers. And we still have a lot more Fed people talking tomorrow. And I think that's about it. And then we're probably going to really be, other than the Fed, the 17th, pretty much going to be fairly noise-free from news. It's all going to be about stocks and them trading themselves. As I said, I'm not looking for a great deal higher or a great deal lower in this market before the end of the year. just some individual stocks, probably, and some short squeezes. The ultra short Russell 2000 kind of popped up on my radar. As we said in the IWM, it was pretty apparent that the volume is up to that high has come down the last two times from 50 million to 35 million to 30 million yesterday. We got a little bit of pullback here on the TWAM, which is the ultra short Russell 2000. You had about 2 million shares from November 6th out here. We busted it again on the 25th on Wednesday with 1.3 million shares. We got into Friday with 500,000 shares. So we had 1.6 million shares on Monday, 1 million shares yesterday, 700,000 shares today. So again, we're going to have some volume to make me think that this is any kind of sign of strength off the bottom. But at the same time, it's just light and variable. Sailors have a term that they called being stuck in the doldrums. And if you know anything about offshore sailing, the doldrums are where the prevailing east and west winds basically hit each other. About every 20, I think it's every 20 degrees of latitude, the wind literally changes from one direction to the other for the most part. But right where those hit, not a lot of wind at all. And so when early sailors would come to the New World, they'd go across those things. And sometimes it took them weeks to get through those lines where the wind was blowing east and west. I just think we're kind of in that right now, in that light and variable part. Don't see a lot in the volume or in the charts that say that we're done up here. But like I said, 20 points down, 20 points up, 20 points down. Could be a lot of back and fill, could be a lot of just stumbling around, but don't really see a lot of people ready to throw the baby out with the bathwater before the end of the year. I could be wrong, but I think there's a much better opportunity to think that this market sets some kind of high, very much like 1999, with a light volume going into Christmas and a lot of people wanting to sell next year and put those taxes off 1 year. We've pretty much had, I think, all the tax selling in for the year, if people haven't already done it. Maybe a few stragglers out here, but nothing that really gets the juices going. Anyway, off 24 points today, about what we had up the other day. So 6 of one, half a dozen of the other. We'll be back tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.